So I did it. I sold. I pulled a meet Kevin. I don't have $20 million, but that would be cool if I did. Are you brought to tears anytime you look at your stock portfolio, thinking about what used to be? Are you getting tired of the constant up and then down some more, and then up a little bit, giving you some hope just to come back down again? Have people been telling you to buy the dip or to dollar cost average in and you have no more money left? Have you thought about selling your stock? Stick around and I'll explain why I sold, what can affect the markets, and whether you should sell as well. For people new to the channel, my name is Jake, and I'm a 30-something living in Summer, USA with my wife and our dogs Archie and Harper. I'm a full-time worker, a part-time personal finance dabbler, a travel enthusiast, and this is us in Dublin, Ireland. That is enough of all that. Let's start to talk business. This has been a weird start to the year, that's for sure. The stock market has started out terribly and only gotten worse. There have been talks of rising interest rates from 1 to 3 to now 7 to 10. Russia has attacked and invaded Ukraine. The S&P has hit its first correction in over 2 years, and oil is the highest price it's been since 2014. And now some of this stuff you may have heard and some you haven't, but I'll briefly touch on this to give a general overview, just to catch you up on my thought process as we move forward. Let's start with Russia and Ukraine. I've been to 28 different countries, but I haven't been to either one of those. Getting it out on the front end, it is extremely heartbreaking to watch the videos of what's going on there. I couldn't imagine being in a situation where I'm seeing missiles going over my head or to watch things around me be blown up. It's also sad to see the people in Russia protesting a war that they want no part of, but I do need to discuss how that can impact the markets. Ukraine and Russia have a long history, as Ukraine used to be part of the Soviet Union, which fell apart in 1991. More recently, Ukraine was aligning itself with Western cultures, which had Russia feeling threatened because they didn't want to share a border with a country like that. While geopolitical tensions are usually shrugged off by investors, what's happening with Russia and Ukraine have dominated the daily markets, and there's reason why. Russia has a central role in the global energy markets within the world. Russia produces about 10% of the world's oil supply, which is about the same as the US and Saudi Arabia. This will lead to surging energy costs that ripple across the global economy, causing higher inflation. Higher commodity prices and slower growth could have meaningful impacts on the global economy, which can make the Fed job even more difficult. These current actions has caused oil to be the most expensive it's been since 2014. Russia is currently second in the world in oil production and currently supplies Europe with 40% of its oil and 25% of its natural gas, while Russia provides the US with 7% of its oil. With all these sanctions, you could see prices going up. Gasoline also makes up 4% of the consumer price index, and if that continues to rise or stays high because of international tension, that will be reflected in our numbers, which will cause the overall inflation number to continue to rise more than it has, which could lead to more action from the Federal Reserve. The Federal Reserve has already discussed rate hikes to battle inflation, which is currently at 7.5% in January of 2022, when they typically try to keep it around 2%. They are projected to raise rates at their upcoming meeting, and people are saying that the market has already factored in 7 rate hikes for whatever that means. But how much they raise those rates at each meeting is still unknown. If you're unaware, the reason they raise those interest rates is because they want to tighten the financial conditions, soaking up extra liquidity in the marketplace, which just means having less money in circulation and making holding cash more appealing. And if you already knew all this, the next time I see you, I'll give you a golden star. Another factor will be that Ukraine supplies more than 90% of US semiconductor grade neon, critical for lasers used in chip making. Russia is the source of 35% of the palladium used in the United States. Not sure if I said that right. I have to go fix the lighting. That's much better. stupid sun. Back to that palladium, that metal is used in sensory and memory cards among other applications. The availability of those materials is already tight. Any further pressure on supplies could push up prices, and that in turn price of chips even higher. This means that anything from cars, computers, phones, solar panels can be affected. The farther Russia pushes will only make this last longer. So all of this can cause inflation to come in worse than already is, causing more hysteria in the stock market, which could also see the Fed try to blame away inflation with not having access to materials from Russia and Ukraine. So who really knows? One thing I do want to apologize about is that if you are hearing some snoring, I do have this dog right here. There's research by LPL Financials, which is summarized in an Investopedia article, which states that just prior to a war, stocks decrease in price, but once the war breaks out, stocks begin to rise. However, in cases when a war starts in surprise, the outbreak of a war decreases the stock prices. They called the phenomenon the war puzzle and said there's no clear explanation why stocks increase significantly once war breaks out. There's usually a 5% decline, but recovers in 47 days. So am I trying to time the market? Research has shown that if someone were to invest $100 per month into the market over 40 years and others saves $100 per month and puts that money perfectly into the bottom of every crash, that the person who timed it perfectly actually underperformed 70% of the time. Charles Schwab did a similar study and simulated how you would perform had you been able to buy at the lowest point in the market every single year for 20 years versus someone who bought in randomly every year. The person who timed out perfectly only got a 1% better return. Clearly, it's better to dollar cost average in, buy and hold, than not try to time the markets. So why did I sell? I was holding cash to make a new house purchase, and after being frustrated with being rejected 3 times in a row and not finding anything to buy, I wanted to play in the volatility of the stock market, which I don't recommend. A study showed that 79.5% of traders lost money. The median return was negative 36.3%. Only 1 in 5 people who tried day trading were even able to just break even. Statistically, you were just as likely to lose everything. I know this, and I still try to swing trade, and I feel better letting you know that this isn't something that you should do. And usually when I swing trade, I'm buying stocks that I have no problem holding on to if I have to. What happened was I bought Tesla heavily on a Thursday and Friday and then sold on Tuesday. To show my level of inexperience, I started buying and then the stock dropped another 18%. As I said, don't do this, but I was able to turn that into roughly a 5.5% return in 3 days. Luckily,
to answer your question, according to Wikipedia, Lee is an American brand of denim jeans, first produced in 1880.
Luckily, I did it when I did, because if I tried that later on or held on to be greedy, I would have lost all my returns. But with the recent decline, I sold a lot of my QQQ holdings to do something called tax loss harvesting, which allows you to take a loss of stocks to wash away a gain. I sold on February 2nd, so I sold the QQQ on 2222. When doing any kind of tax loss harvesting, you aren't able to buy the same thing you just sold. So I started to go back in on February 24th and buy the VOO. I know better than to try and time the market, but I luckily bought back in at a very low point. Thanks so much for watching, and I hope you guys have a better idea of how to handle your money. And if you know someone that could benefit from this information, then consider sharing this with them. And if you want to help me grow the channel, then tap the like button. And if you want to be around for when I post my next video, do not forget to subscribe. And if you're interested in seeing any of my travel videos, then you can check out Jake Miller Does Travel. And I'll see you guys next time.